This is brought to you by John Daniel and Partners LLP.
Somewhere, or maybe you want to start off a bakery, for example. Maybe you also want to start any other enterprise that you may think of. We understand that in every sector that you may choose to venture in, there are some requirements that you'll need to comply with for you to operate seamlessly. It can be from the government agencies. It can be, that is the national government. It can be from the county, like we shall see in the slides. And these requirements, they are very important to adhere to, because failure to do so, you may face some disruption, whereby maybe, for example, the county officers, they have visited your premise and they are telling you you have not obtained this particular license. Now you have to close shop and work through that so that you are compliant before you begin your operations. So it is also a way to mitigate the risks that are associated with non-compliance. So today we'll cover a few aspects with regard to this subject. We look at the business registration and licensing. We'll also take a look at tax compliance and obligations. We'll also check on employment law and benefits. And after that, now we'll look at the financial reporting and accounting standards. Then finally, we look at the best practices with regards to compliance, maintaining the compliance that we are talking about. To start us off, our first item will be on business registration and licensing. Before you begin operations of any business that you have in mind, the first step that you take is to consider registering your business, and maybe first understanding the sector you want to venture in. What are the requirements? So business registration in Kenya, they are guided by the provision of the Business Registration Service Act, which was enacted in 2015. And now this act, it gives a framework on how various businesses can be, or various business entities can be registered in Kenya, whether you want to register just a business name, that is mainly for the sole proprietors. You don't want to incorporate, you don't want to get into a partnership, you just want to operate as an individual under a certain business name. So you can register a business name, you can register a private limited company, you can also register a public limited company, you can also register a company limited by guarantee. This is mostly for NGOs, the non-profit. Then you can register a limited liability partnership, or if you are a foreigner, you can register a foreign company in Kenya. So this act gives the framework that you should follow when you want to register your business entity. And the best thing is that you can do registration of all these entities simply via eCitizen. You just need to log on to your eCitizen account, log in, and then head to the Business Registration Service tab. Then you will choose the kind of entity you want to register. Then you will follow the prompts and the steps that are suggested. for you to obtain the relevant certificate. Having said that, in Kenya, depending on the sector that you want to operate, there are various requirements that you'll need to comply with. To start off, when you want to start a business, you must obtain a business permit from the local authority. Nowadays, it's the county government. And I understand that different counties, they have different requirements for business permits. For example, in Nairobi, we have what they call the Unified Business Permit, which they consolidate all the licenses, and now you just apply for it as one license. So you may want to, in whatever county you may be operating in, you may want to understand the number and the kind of licenses that you need to obtain before even starting your business or your enterprise. So it is part of your planning. At the point you are planning about your capital, you are planning about your market, you are planning about your distribution channel, it is still at the same point whereby now you look at the compliance requirements, in this case, the business permit. Now, if, for example, you want to venture in a manufacturing enterprise or business, in Kenya, you will need to obtain a license by the Kenya Bureau of Standards. And this is mainly to ensure that in whatever you are going to manufacture, you comply with the national standards, mostly touching on consistency, the quality of the product you want to manufacture, and even the safety. Are they safe, for example, to use the items that you want to manufacture? Are they fit for purpose? If, for example, you are manufacturing electrical cables, are they safe while in use? Or maybe will somebody purchase them and upon installing an electrical installation, maybe they misbehave and cause fire, for example. So before you proceed with the manufacturing of such items, you'll need a license from KEBS. Further, if you're dealing with excisable supplies, in this case goods, you need to obtain a license issued by the Kenya Revenue Authority. And this can be, for example, if you are dealing with alcoholic beverages, wines, and maybe you are also dealing with, for example, bottled water, you will need to get that license first by KRA so that you can, before you begin your operations. And the steps, they are simple. You just log into iTax and you follow the set out procedure, just like how we apply for the other tax obligations in iTax. So you log in into iTax and go to registration, and then under obligation, you will select excise duty, and that's how you are able to obtain to apply for that license. Then of course there are other steps to be followed, even I think an interview with KRA, so that they understand why, and if you are keen to comply with the requirements of those who operate under that kind of a license. The other compliance is the occupational health and safety license. And this is actually issued by the Directorate of Occupational Safety and Health Services, which is under the Ministry of Labor in Kenya Department, I think Department of Labor. And this one is just to ensure safety in the workplace. The employees working, for example, you have a warehouse, you have a manufacturing unit. What are the working conditions around that place? Is the noise too much? Are you emitting so much dust? Is the lighting okay? Do you have a fire safety measures around that place in the event of a fire? Do you have plans and proper protocols to ensure that you are able to combat that fire in the least time possible? Are your employees or staff uh, well equipped so that they don't suffer any safety hazard while they are working? So this is another requirement that you may want to check out for, especially depending on the kind of enterprise you want to set up. The other one is the health and safety license. And this one mostly is obtained by business people who may want to venture in the food business, beverages, pharmaceuticals, and so on. Mostly this one is obtained from the local authorities, from the counties. So they come and they examine your premises so that they are sure that, for example, the food items you want to store in a certain store, they are safe for consumption. The environment around which you operate when dealing with these items, it ensures safety of these items, which are normally for human consumption. I understand that they differ in different counties. There are some counties, even in the rates, some counties they may charge, let's say 10K, for example. Others they may charge some amount above that or below that. So it's something that you may want to check. Some, like Nairobi, I understand they have put it together with all the other licenses such that you get a unified license. If you operate, for example, in the hotels, or if you want to venture into the hotels industry or as a travel agency or as a tour operator, you are required by law to register or to apply for a tourism license so that you operate under that license, and you be keen to comply with the requirements that operators in that industry are supposed to adhere to. If you're dealing with imports and exports, you are required to obtain import or export license, and most of this one is given by the KRA. So mostly this one is to just ensure compliance around customs regulations. And sometimes government may want to understand how people are trading, especially on some specific items which are imported or exported. So this license is just to make sure that the government has eyes on the guys or the people who are dealing with such stuff, importing and exporting them. Certain professions like medical doctors, lawyers, accountants, engineers, and other professions, they require you to obtain a professional license. For example, us here at John Daniel Partners LLP, we operate under ISPAC, and we are regulated by ISPAC. So for us to begin operations, we had to obtain that license from ISPAC, which is actually renewable every year. So you may want also to understand if you want to start off your practice, as an accountant, as a doctor, as a lawyer, as an engineer, are you compliant? Are you um, keen to comply with the requirements of that profession? And it begins with applying or obtaining that license. The other permit or a license that you may want to check if you will need to obtain before you start off your enterprise is the environmental license, and this one is issued by the National Environment Management Authority. And suppose, for example, you have your business that emits too much waste. It can be smoke, it can be wastewater, and maybe you are close to a river, for example. So NEMA may visit you and ask if you are compliant. And at this point, you may want to make sure that you understand the requirements by NEMA as you set up your enterprise around such a place or an enterprise of that nature that has a direct impact on the environment, so that you don't suffer some disruptions in the course of your operations just because NEMA insists that you need to obtain the license before you can proceed. Like I had mentioned, if you're dealing with accessible supplies like alcoholic stuff and bottled water, KRA will require you to apply for the excise duty license. And besides that, KRA will have a continuous or a regular monitoring on how you are conducting your business. And in addition, you'll also be required to register in the accessible goods management system. It's a system by the KRA whereby individuals and entities dealing with accessible supplies, they are required to register. And this system also helps in managing the excise duty stamps, and also helps in how these entities and the business people account for those stamps. So you may want to understand, for example, what is the accessible goods management system and how to, for example, register and how to comply with the requirement. And remember, if you're dealing with accessible goods, you'll need to file returns every month before 20th or by 20th of every month. The other sector-specific licenses that you may want to obtain to remain compliant, especially if you are in a regulated sector, for example, telecommunications, or in a financial services sector. For example, if you are in a microfinance, you have to set up a microfinance. You will need, or you will be required to obtain a license from central bank. So, for example, you may also be dealing with a business that is in the aviation industry. So there are licenses and permits that are required for people operating in such an industry to obtain. Other specialized permits from government agencies may also come in handy. For example, if you are dealing with milk, if you want to open a milk ATM or a milk business somewhere in town or in your estate, you are required by law to obtain a permit from the Kenya Dairy Board for you to operate that enterprise. Also, if you want to manufacture alcohol and other beverages, you will also need some licenses from for example, like from the county. Sometimes there are permits that NACADA gives, uh, especially if you are dealing with alcoholic stuff. So there are various specialized permits which are not similar in every sector or in every area, but you may want to understand or do a thorough research on what other licenses besides the standard ones that we have discussed that we'll need. You may remember currently, uh, people operating scrap businesses, they are required to have some licenses or some license to make sure that they are compliant with some provisions, some regulations that the government put in place to avoid vandalizing key infrastructure um, items and assets in the country. Some few years ago, there are vandalism cases that were several. So the government had to institute such a measure to ensure that people operating the scrap metal businesses, they are able to account for their sources of these items to ensure that these items, for example, they are not coming from vandalized electrical installations, maybe from Kenya Power and so on. So that's basically a preview of the most common licenses that you may want, and also the permits that you may want to make sure that you obtain them before you begin your enterprise. I know it's not exhaustive because there are some, like I have mentioned, there are some sectors, there are some businesses that will require specialized permits that may not be mentioned in this slide. But you may want, before you begin your operations, you may want to understand what else do you need to comply with. You need to have like a checklist before you begin your operations. Secondly, we want to look at the tax compliance and other obligations that businesses need to comply with. And before you begin your business, whether you are operating as a sole proprietor or you want to incorporate either as a public or a private company or a partnership, you'll need a Kenya Revenue Authority PIN. And now upon registration of the PIN, that's where now you also register for the various obligations that you are liable to comply with. For example, if you are dealing with vertable supplies and you foresee a situation whereby by the end of the year, that particular year, your annual revenues, they will hit 5 million mark. The law requires you to register for value-added tax. If you are dealing with the excisable goods, you are required also to register for the excise duty and so much on. So if you are also paying your employees emoluments, you are required to register for pay as you earn obligation. And to register for this, you will need your employees' KRA pins so that that process can be successful. And it doesn't mean that, you see, the law provides that the people who should pay PAYE should be the ones earning above 24,000 every month. But now in this era of e-teams, whereby you are supposed to have all your expenses supported by e-teams invoices, and in this case, your employees, maybe they are earning below 24,000, in that you are not able to, or you are not required to remit their pay, you still need to remit that report, to file their incomes through pay. But in this case, they will not need to. You will not need to remit anything because they are not above the threshold. Because, like we shall see in the subsequent slides, the other alternative is maybe to have them if they are below the 24,000 mark. The other alternative is to have them invoice you via eating, so that that expenditure is acceptable by the KRA when you are filing your returns at the end of the year. The other thing that you need to register on is the NSSF, and this one is done by the employer and both the employer and the employee. The other one is previously it was called the NHIF, but you may understand that by the end of this month, by 30th of September, we'll be transitioning to social health insurance funds. So this is one of the requirements, that if you have employees that you pay emoluments, you need to register for them. You need to register for these particular statutory registration, so that you're able to remit the deductions every month. The other one is meter registration. If you have people that you pay emoluments in your enterprise, it can be small, it can be big, you need to register for NITA and remit 50 bob for every employee at the end of every month, by 9th of every month. The other key tax obligation is the income tax. Income tax, like I have mentioned, in this case, we look at the corporate and also the payee, like I have just discussed in the previous slide. So corporate tax in Kenya, it is paid by the companies. So local companies or companies registered in Kenya, they are charged tax at the rate of 30% of their net profits. And non-resident companies, they are charged tax at the rate of 37.5 of their net profit. So like I had said, once you have deducted pay from your employees' payroll, pay slips, that is, you're supposed to remit the same to KRA by 9th of the following month. For companies and even individuals, sole proprietors, there are requirements by the law to pay what we call installment tax. Installment tax is just the normal annual income tax that you ought to pay at the end of the year. But now the government, since the government cannot it cannot wait for your taxes for January for you to pay them in December, it requires you to pay well in advance so that it can keep the various services it supports active, whether it's the medical facilities, whether it is education, whether it is security of the country. That cannot be done if the government has to wait at the end of the year for you to remit the taxes. So it requires you to remit the taxes in four installments. That is on the fourth month of your financial year. And remember, your financial year can be the normal calendar year, January to December, or it can be like the government year from 1st of July to 30th of June. So regardless of your calendar year or your fiscal year, sorry, you are supposed to remit uh, your taxes in equal installments in the 4th, 6th, 9th, and 12th month of the year. And how it is calculated is, if your business is an ongoing business and you paid some tax last year, so you add a 10% above what you paid last year. So if you paid 100,000 as tax last year, KRA requires you to add 10%, which it assumes should be your tax payable for the current year. In this case, it will be 110. So you divide that 110 in 4 quarters, and you pay by 20th of the 4th quarter, by the 20th of the 6th quarter, 9th month, sorry, and the 12th month. If you are beginning a new business, you will need to project. And if your tax payable, if you project your tax payable will be above 40,000, now you will need also to make plans to pay installment tax of the amount that you project will be payable at the end of the year. Other obligations. I had mentioned about ETIMS. ETIMS was introduced by KRA, and it was empowered by the Finance Act of 2023. And this one also aligns with the amendment of Section 16 of the Income Tax Act. And the main reason, or the main objective of development of this system was to make sure that the expenses that the businesses incur, they are known by KRA, like they are transmitted through KRA systems, so that the government visibility of your business operations. And it is not just your expenses, it's also your stock. If you are dealing with commodities, inventories, through it, the government can be able to monitor. You purchased this number of items. At the end of the year or at the end of the month, you have sold this number. So you should declare this much as the revenue or this much as the tax. So one of the key objectives of introducing this system was to give government visibility of your operations. And then previously, the government has had cases whereby businesses are claiming expenses that are not fully and explicitly incurred to generate incomes that they are declaring. So to avert this, the government had to make sure that only expenses that are supported by EPIMS, only invoices that have been generated through ETIMS concerning expenses and even purchases, they are allowable. So you cannot claim at the end of this year, 2024, because this kind of provision began operations from 1st of January this year. So at the end of the year, when you are filing returns for your company or for your business, any expense that will not have been transmitted through it is not going to be an allowable deduction, and as such you will have to pay taxes even for that expense. So it's important that even as we conduct our businesses, we ensure that our business expenditure they are supported by an EPIMS generated tax invoice, so that at the end of the year we don't end up paying taxes even on some expenses that we incurred in the year. There are some exemptions with regards to e-teams. So emoluments, meaning salaries, wages, these ones may not need to be transmitted via e-teams because, like I said, if you are filing your pay and you have included everybody that you have employed, so that data is already remitted to KRA. So there is no need to still pass that through e-teams. Imports also, they're exempted because uh, this information about what you import will be handled at the point of entry. Whether you are importing through Mombasa or maybe by air, wherever you are getting clearance of your import, all the information that the KRA needs about your import will be recorded and updated in ITAX. Investment allowances, these ones, they are deductible allowances once we are calculating the tax payable. So these ones you will need not to transmit them through e-teams. Also, tickets with regards to airlines. So these ones are also not required to be e-team supported. The other ones include interest and any other similar payments. Although the commissioner maybe at times may give direction on what other gets into this category of exemption. But in the meantime, these are the only ones that are exempted. So we have different solutions with regards to e-teams. We have what we call the 3-point or the Windows solution. And this one is mostly for taxpayers selling goods at a single location with a single pay phone. For example, a supermarket in this case. And this solution, it has a stock module. It means, what that means is that it keeps a track of your inventory, your stock movement. The other one is a multi-payment option, which is also Windows based. This one, just like we have seen in the past solution, it is suitable for taxpayer selling goods, but having multiple locations with more than one pay point. We can also give an example of a supermarket with the different branches. Pay points e-teams. This one is suitable for people who may want to use their tablets or their phones to process the invoices. So this one supports or it's capable of being installed in a tablet, supported by an Android operating system version 8 and above. It also has a stock module, meaning that you are able to track your inventory using that solution. Then we have online portal e-teams, and this one is mostly for service sector players. For example, a law firm, a dental unit, a dental practitioner. So once you want to invoice, for example, if it's an accounting firm or a law firm, you want to invoice your clients, you can log into the online portal. If you have not registered, you register first. You register even the service that you're offering, then you are able to generate your invoice. the virtual sales control units and online sales control units. This is a system that provides integration with other systems. So, for example, you want to integrate your accounting software with the KRA's teams. So this solution gives you that leverage, so that when you are dealing with several taxpayers, your billing becomes a bit easy, because you not need to keep logging in the system to generate a single invoice at a time. So this one is mostly suitable for people dealing with several transactions and different people. Then we have another simplified version of eTeams called eTeams Lite, which is web-based. So businesses with minimal transactions can utilize this solution. And you can actually access it through eCitizen. You just log into eCitizen, and then there is a tab labeled sales. And then from there, you can be able to register. It takes you to this to eTeams website, where now you are able to first register, and then you can subsequently process your invoices. All the 6 solutions that I have discussed, they require you to be connected with the internet. But for the last solution, which is eTeams Lite, it uses the USSD functionality. So even with your phone, which is not internet enabled, like the ones we call Kabambe, you are able to still process your invoice by dialing *222# and then following the prompts. You are able to process an eTeams compliant invoice. So I think you may want to understand maybe which solution fits your business well, because with the number and the types and the various functionalities, I think almost every enterprise is well covered in all these solutions. VAT. VAT is one of the indirect taxes that is administered by the Kenya Revenue Authority, and it is mostly levied on taxable services, either in Kenya or imported into Kenya. Remember, even if you are importing things, you pay what we call reverse VAT. So the threshold for registering for VAT in Kenya is 5 million and above within a period of 12 months. So it is not a must that you should have hit that threshold by the time you are making your application or registering. But if you intend, if you are foresee that at the end of 12 months, you'll have hit the mark of 5 million as your revenue, you are required to register, but you are supposed to register with the KRA for this particular obligation within 30 days of being liable to pay that VAT. Although you can still register on a voluntary basis. So I understand sometimes maybe you are dealing with clients who may want to deal with people or businesses that have been registered for VAT only. And maybe it's because they want to claim that VAT as they deal with you. So in such instances, KRA also gives a window for voluntary registration, even if you have not hit that threshold of 5 million revenues for the 12 months of your fiscal year. So beginning January this year, businesses now they are able to access pre-filled VAT returns. And this one has really helped to simplify how we do VAT returns, because you just you just download the file that is pre-populated, then you check, um, and if there are errors, uh, there is a window to change the errors, and then you file the returns. And this one has been supported by the items that we have just discussed, because that information about your purchases and sales is well captured by the KRA system. In the administration of value-added tax, input tax, which means the input VAT you incur when you purchase items, you can only claim that for 6 months only after the tax has become due. And for you to claim that as input VAT, you must keep good records. You must provide satisfactory supporting documents for that to be processed. The records with regards to VAT, they are supposed to be stored either in English or Kiswahili in Kenya, and for a period of 5 years. So you don't discard your records before the 5 years period lapses. Otherwise, if KRA decides to do an assessment of your VAT compliance, and maybe you have discarded your records, you may find it rough. So you need to keep your records up to a period of 5 years after the transactions happened. So any excess input VAT, that is the input, that is the VAT you are charged when you are purchasing vertible supplies. It is carried forward and it is deducted in the subsequent tax period. And if it is not claimable, if there are no instances whereby you can deduct it in future, that VAT is refunded to the taxpayer. And that can happen in a few instances. For example, if you are making zero-rated supplies, so maybe, for example, you are supplying your supplies to enterprises in special economic zones, or maybe your supplies they are for export. So there is no point that you will need to set that with your purchase. Maybe there are just very minimal instances whereby you can be able to claim that input tax or input VAT. So the government may decide to refund that amount to you. The second instance is when your tax has been withheld by an appointed withholding tax agency, and maybe you ended up still paying more. So you can claim that amount which was withheld by the tax agent, and the government can make a refund on the same. I think I had discussed about when you are dealing with taxable supplies, but you are making the sales to or supplies to official aid funded project by a registered manufacturer approved by the cabinet secretary in accordance with the first schedule. So the first schedule of the VAT Act, it provides for the instances whereby you are exempted from VAT, and even the entities exempted to pay VAT. Like I had said, VAT is due on or before the 20th day of the following month. For example, we are in September. So if you are registered for VAT, you will be required to file for VAT by 20th of October and remit the same to KRA. So what are the filing requirements? So for all those obligations that we have touched. Every obligation has its date that you need to file the returns and remit the amounts. So for NSSF, NHIF, and now transitioning to SHIF, payee, meter, and affordable housing levy, all these deductions they are done and remitted by 9 of the subsequent month. Then if you are withholding taxes, remember, if you are dealing with, I'll give an example, if you have a contractor, so they are not in your payroll, and maybe they invoice you. If the amount that you are paying them is about 24,000, you are required to withhold 5% of that amount and remit the same within 5 working days to carry. I had mentioned that for value added tax, that is VAT, you're also required to file and make payment by 20th of the subsequent month, similar to excise duty. So, lastly, we are going to look at the employment law and the benefits. Remember, when you are starting an enterprise, you may not work individually. You will have employees, you will have people to support you. So there are requirements by law. And for example, if we look at the Employment Act of 2007, which was revised in 2012, it sets out the various requirements that the employer will need to comply with. For example, all your employees must have a written contract detailing the terms of employment, their roles, responsibilities, and the much you are paying them. That is the remuneration. Then you need to be clear on the kind of contract that you are having with your employees, whether it's permanent, temporary, or just casual. And these are terms that you will agree with your employees. These contracts also should be clear on the legal framework in case of an employment dispute. So to avoid the instances whereby maybe you have terminated somebody or something has happened whereby you'll need to separate them, the contracts should be very clear on the steps to be taken. When a staff maybe wants to resign, what do they need to do before you can let them go? So that should be captured well in the contract. Now going to the employees, we have just discussed about the employer. So the employee has right that should be adhered to by the employer. For example, the minimum wage. And the minimum wage is maybe it can vary depending on the industry that you're operating in and even the location. But I think the standards, there is a standard minimum wage that was announced, I think, 1 or 2 years ago. So you may want to understand what is the minimum wage, so that you don't operate below the minimum wage. When it comes to leave entitlements, also the Employment Act provides for the days that every employee is entitled to with regards to annual leave, which is 21 days, with regards to sick leave, 14 days of sickness, and also for maternity, which is 3 months or 90 days, and paternity, which is 14 days. So for purposes of compliance, it's good to know that it is not a favor to the employees. It is not like you are the one to decide whether to give maybe your employees uh, their leave, to accept their, to approve their leave or not. This is just a reminder that the law provides that the employees have this right to this kind of leave. Then, when you terminate your employee, you must have very clear grounds on why you are terminating them and follow the due procedure or the due process, which includes the notice period, as you will have outlined in the contract. And remember, there is a standard way or a standard contract that is provided by the act. If you do not, if you don't have your own uh, contract of some sort. The law also provides a standard contract or a standard procedure that should be followed when you are terminating your employee. So besides this, there is the NSSF contribution. We had touched on this, and now the employer will be required to remit this deduction on behalf of the employee. Same as NHIF, and similar also to pay as you earn, that is pay you. So what are the financial reporting and accounting standards that you should comply with? Remember, it is very important for you to keep accurate records with regards to the normal operations of your business, transactions, the purchases you are making, the expenses you are incurring, whether they are for utilities, whether they are related to payroll, and also the tax documents. For example, if you withhold tax with regards to a certain payment to a contractor, you need to keep those records very well, so that at any given point you are able to provide the support that is needed. Maybe when KRA may come to assess you, you are able to provide that information. And remember, we said you have to keep that information for a minimum period of 5 years. Then there are other mandatory records that you need to keep. For example, the sales invoices, the purchases receipts, the bank statements, the payroll records, and the tax filings that, like I have mentioned above. And I also mentioned about the period that you should maintain the records. So, finally, it's about financial reporting. Financial reporting is also very critical when you are running a business, because this one now talks about how your business is faring on. For example, what is the financial status at any given point? What are your expenses for a certain period? It can be a month, it can be a quarter or a year. So how do you prepare those financial reports? Are they standard? Are they dependable for you to be able to make decisions that are very effective with regards to your business? You also need to comply with the international financial reporting standards. So if you are using an accounting software, or if you are just doing your manual bookkeeping, you need to ensure that all the financial statements are prepared with the international financial reporting standards. Um, Audits are also very important because they help give an opinion on how you are faring on, how your accounts are. And much as we understand that there is a threshold by law on which companies should adhere to, audits they are very important because they give you that advantage of knowing maybe how your business is faring on. They also help you to map the risks and how to improve them. And also, some financial institutions, once they want to lend you, they require you to have audited account. So you may not be within this threshold that we are talking here about 50 million in terms of revenue or 20 million in terms of your assets value, but you will need that for your own benefit as an enterprise. Finally, we'll want to look at the practices that will help us to maintain compliance. And number one is regular compliance reviews. These ones are very important because they help to flag out the areas that you need to put more effort on so that you remain compliant. And these ones include internal audits. You can have compliance checks. You can have tax health checks done to your business so that at any given point you are assured you are compliant with the various obligations. You also need to maintain a good compliance checklist in your facility, in your enterprise. For example, all the permits that you have discussed, or the licenses, or the obligations, you can have them as a check in a checklist, so that at any given point you know you have, for example, filed for all the statutory deductions by the date that you should be able to do that, and you have remitted the associated amount, and then even the licenses, you have obtained all the relevant licenses you need to obtain. Maybe it's at the beginning of the year and you want to renew. Which licenses do you need to renew every year? Which ones do you need, for example, to renew after maybe 6 months or monthly, or maybe after 2 years, depending on the kind of enterprise you are operating in. The other important thing is training. You'll need to keep yourself up to date, and maybe your staff and the people supporting you, so that you remain compliant. Tax matters and regulatory matters, they keep changing. You may understand that there were several changes that were proposed in Finance Bill 2024-2025 that failed to materialize, or that was withdrawn. So if such came into being implemented, you understand that they could have caused several changes in how maybe we do things, how we file returns, how much we pay. So it's important to keep ourselves up to date. Even on employment terms, employment laws, they keep changing. So you will need to keep yourself up to date, or updated, so that you don't find yourself in a place whereby you are not compliant. And sometimes it's good also to consult experts. When things are complex for you, you may want an expert to help you navigate through the intricacies that are associated with these obligations that we have just discussed, whether they are tax obligations, employment laws, and other forms of compliance. Whether it's a lawyer, maybe with regards to employment law, you may want also to engage an accounting professional or a tax expert so that they are able to guide you um, on those matters. And here at John Daniel, we have done that previously, and we are still doing that even in several clients. We help to do tax health checks, and we also support businesses to set up accounting systems. We also help businesses to do the normal accounting and also even in bookkeeping. We also help in payroll processing. So these are services that you can consult experts to assist you in, so that you are also able to focus on the core matters of your business. If you are a bakery, you may want to focus on baking breads and not dealing with filing returns and doing the accounting. So that work we do, and we support our clients very well. So technology is also very important, like I mentioned, and it's good now to adapt the the modern ways of doing the accounting. For example, nowadays we have what we call the cloud accounting software, which really help businesses to handle their account properly. And you can have even the documentation we have just discussed held online, so that even in case of a tragedy like fire, everything about your business is held safely in cloud. And for us, for example, in John Daniel and Partners, we use a very robust software called Xero, Xero, which is a very good accounting software, especially for small and medium-sized businesses, which helps you to remain compliant because you are able to track your expenses, to process your payroll, and prepare financial reports. And it is easy to use. And also, the cost is also affordable, even for small businesses. So you may also want to automate uh, for example, the returns. You may have reminders reminding you the due dates or the deadlines for filing the returns, like you have seen, because there are several. You may be under obligation uh, of various compliance requirements, such that you may lose track of the date. So you may want to have automated reminders to help you to help you remember when to do the submission. So with that, I thank you for your participation. And now, if we have somebody with questions, we can address them. I take note that my colleague Beatrice has managed to answer most of the questions that you have been asking. If there is a question that we are yet to answer, maybe you can shoot it out. We see we see it and we answer. In the meantime, Frida, you can take over.
Hello, everyone. Thank you so much, John, for the detailed presentation. I see in the chat section there are two questions that are yet to be addressed. One is from Patricia. Thank you for this training. She's asking about the employees that are on short contracts, like 3 months. if they are entitled to annual leave, maternity, and what's their basic pay. Another one from Faith. Are accounting services by sole proprietor vertable? And what if you pay a contractor full amount without withholding tax? What happens? How can you correct that? John or Beatrice, you can respond.
Thank you, Frida. Thank you, Frida, for guiding us in that area. I can see the question from Patricia on employees on short contract. So the Employment Act provides that the periods for which you employ someone, it's not important. Like employees, they are entitled to this leave regardless of the month that you employ them. Whether it is 3 months contract, like Patricia is asking about here, they are eligible for the maternity. In this case, it will be maternity leave because now annual leave is prorated, and I think the standard days it is about 1.75 for every month. So it is prorated. So if it is 3 months, maybe that can be prorated in that manner. Going to Faith Gitonga, are accounting services by sole proprietor vertable? Yes, they are. Yes, they are. And of course, it will depend with the person that you are dealing with. If they are VAT registered because they invoice you amount inclusive of VAT. The other question is, what if you pay a contractor full amount without withholding tax? What happens? How can you correct that? So if you pay somebody, suppose you are to pay somebody 100,000 as contract fees, so you pay them the full amount without withholding 5%. KRA assumes that you are ready to bear that burden, so you will be surcharged yourself to KRA assumes that is the net, so you'll need to cough more or to have an extra expenditure because of that 5% of that 100,000 that you pay them. So I don't see any other question. Maybe if there's any question that we have not handled, please you can report it kindly. We will be happy to answer it. Yes, I can also see a question from Rose Wangari. Nita remittance is done together with payee, hence the same timeline. Yes, that's very true. These changes were effected in 2022. That's awesome from Rose. I think she's just clarifying that. That is an awesome response or clarification. They used to be done by fifth, but that was changed. Now they are done together with payee.
There is another question from Patricia. I think she meant if there are basic pay for casuals.
So basic pay for casuals in this era of e-teams. Remember, I mentioned that your expenses as a business, they should be supported by e-teams so that you are able to claim them at the end of the year. So even if you are dealing with casuals, maybe you can have them invoice via e-teams. We have clients who are doing that. They can register in e-teams or you can use the USSD solution. to process e-teams compliant invoices so that you, at the end of the year, you are able to claim that. Or else, you can still have them, even if they are casuals, you can still have them in your payee returns. And the beauty with that is that you will just have declared, even though there is nothing to pay on their behalf, but you'll have the advantage of having declared that, and that information is stored in ITA, so that at the end of the year, that can be allowed for deduction. I hope that is clear, Patricia. Felix is asking if we will be sharing the presentation. Yes, we will. We will share this presentation slides once we are done.
Thank you so
Frida,
much, John.
I don't seem to find any other question. Maybe unless I have missed out any, somebody can just post them if I have missed them.
There is no question.
There is no
but
question.
there's a
Although I
comment
see,
from Rose.
yes, there is a comment from Rose. I know Rose. Rose is a HR practitioner, so I know she's well versed with the employment law, and she has helped in clarifying that. Of course, it will be guided by the minimum wage guideline.
Thank you, John. Since there are no further questions, we welcome comments. Maybe Rose, you can unmute and say something, or anyone who has something to add.
Good morning. Thank you, Frida, for this opportunity. Thank you, John, for taking us through the training, and it's quite informative. However, I would like to clarify something on the sick leave. It's not full 14 days sick leave. It's 7 days with full pay and 7 days with half pay, and thereafter it's at the discretion of the company.
Thank you, Rose, for that clarification about the sick leave. And thank you also for your participation and your insights. Do we have anyone else who may want to give a comment? You can still unmute and comment. Feel free, please.
Hello, my name is Martha, and I'd like to thank you for the time you've taken to take us through this training. It's very informative. My question is, could you kindly at least get a recording of the same, if that's okay by you?
Thank you, Mother. The presentation will be shared later in the day in your email. And also it's good to notify you that we have a common WhatsApp group where we post various updates in our space. Mercy has shared the link to our WhatsApp group. Feel free to follow and join. Thank you.
Thank you.
Faith Gitonga, would you like to say something?
Sorry, this is Felix. I had asked in the chat box, what is the name of that software that John mentioned? The accounting software.
Thank you, Felix. The accounting software we use is called Xero. That is Xero, and it's a very robust accounting software, mostly for small and medium-sized businesses. Maybe you can check it out online, and if you need any clarification or guidance or advisory about it, you can reach out to us. We'll be happy to help.
Okay, thank you so much.
Karibu.
Thank you so much, John. And thank you everyone for taking time to attend our webinar. We normally have these webinars every other month at the end of the month. So our next webinar is scheduled for October 31st. Please mark your calendars. We are going to share the links in your email address if you don't mind, and you can join us in the next presentation. We are John Daniel and Partners LLP, a CPA firm based in Nairobi, Kilimani. We specialize in helping SMEs in the accounting space, bookkeeping, tax advisory, management advisory, and also helping them in doing their audits, both internal and external. Once again, thank you so much for joining us. You may feel free to leave. That marks the end of our presentation, and we are hoping to see you in the next webinar. Thank you so much. And before you leave, maybe we can give John a chance to give his parting shot, and that will mark the end of our presentation.
Thank you, Frida. Thank you, Frida, for guiding us through. And I want also to take this opportunity to thank every participant that took time to join in this webinar. And I hope it has been informative, like we intended it to be. And our objective of doing these webinars is to empower businesses and take our services closer to the people who needs our services and our expert advice, and to make it simple even for them to reach out when they need our support. So we normally have these webinars every month, and they revolve around what SMEs or enterprise owners need to be looking out for them to first remain compliant and also to optimize their operations. So I thank you all, and I hope you have a good day ahead.
Thank you, John. Once again, thank you so much for your time. As I mentioned, we are John Daniel and Partners LLP, and our contact details are displayed on your screen. We are based in Kilimani, Nairobi, Commodore Office Suites, 3E. It's on Kindaruma Road, along Avenue Junction. You can reach us through info@johndaniel.co.ke or call us at 0722-817-818. It was a pleasure to have you in our discussion. Hope to see you in our next webinar. Thank you so much.
This is brought to you by John Daniel and Partners LLP.